Hello, traders. FX Pip Collector here. Today is Tuesday, November 4th, and this is my analysis for the US dollar index, and we're starting on the daily time frame. So on the daily time frame, like I've been saying, this 105 to 100% Fibonacci extension, I think, is definitely an area where we could possibly get a turn. It also would have us taking out the liquidity from this high over here, but we can't just assume that it needs to turn here because I also have a secondary target based on Fibonacci extension way up here, which would also grab the liquidity from this wave 4 over here. So we can't assume anything when it comes to the market. And if you pay attention, especially on the correct time frames, you don't really have to assume. You can normally tell when a wave is complete. Going down to the 4-hour time frame is where I would say that we would be able to tell when this wave that started right here is complete, because this is where we can see the nice smooth cycle of high, low, high, low, high, low. If it breaks the cycle of high, low, high, low, high, low on this 4-hour time frame, especially if it happens at a Fibonacci, extension level, one of our key levels, then we would definitely stop being bullish the dollar and stop being bearish the dollar. But like I said, just because we're at key levels doesn't mean it has to turn. Allow the market to tell you it's going to turn with a break of structure. Once you get the break of structure, then start looking for shorts on the dollar via the dollar pairs themselves. Until then, I would definitely still be looking for longs on the dollar index based on the dollar pairs. So anyways, don't forget to check out my website linked over here in the corner. And as always, thank you for watching and happy trading.